Good afternoon. Today is Monday, March the 20th. The time right now is 20 minutes past noon. And just to recap what happened last Friday on Wall Street, we can see that Wall Street remains a little bit jittery. And although there was a bit of a rebound in the Dow Jones, but that rebound is very tentative. Market hit a low of 31,429 on Friday before we can see buying interest coming back in the marketplace. But then again, we can say that this tentative rebound is, like I said, very tentative. There's always a risk for the market to unravel again because over the weekend we had a couple of new developments here. First of all, another US bank is under the spotlight. This bank is called First Republic. It is also among one of the most vulnerable bank because they have 90% of their reserve or their assets in what you call it, the hold to maturity securities, which is where the market crisis actually develops. So right now, major banks in the US is actually agreeing to pump in $30 billion to support this bank, hoping that this can be contained before the contagion spread to the other bigger banks, and that is always that risk. And of course, the other risk this week is of course the FOMC meeting. Nobody is sure what the Federal Reserve is going to do. Are they going to hike rates as to what they have promised? And if they hike, would it be 50 basis point or 25 basis point? It will be crazy for the Federal Reserve to actually do a 50 basis point hike. Market is pricing in a 25 basis point basis point hike, or even the possibility of a pause altogether means to say that the Federal Reserve is going to sit on its hand and not do anything. That will send a very powerful signal into the market that this rate tightening cycle may come to a point in time whereby any more hikes in interest rate is going to further damage the banking sector. Okay, so we will be watching how the Federal Reserve is going to play the game come Thursday morning at 2 a.m. Singapore time. But again, from now until then, the market will be very jittery. And then and the other development was in Europe. Credit Suisse actually continues to be supported after the Swiss National Bank came in to provide a lending facility of 54 Swiss francs, 54 billion Swiss francs to support Credit Suisse. And on Sunday, we have news that UBS, which is their biggest competitor, has offered to buy them out for $1 billion on condition that their shareholders do not have a vote on this. Again, with the blessing of the Swiss National Bank, which is going to provide 100 billion Swiss francs to backstop this deal. So again, there are things happening, but not sure whether it will be enough to allay the fear in the marketplace, because the fear is actually white hot right now. Okay, so based on technical, we can say that there is a possibility market may actually rebound a bit more on the condition that no new development detrimental to the banking sector is coming out in the next few days. Over the S&P 500, we can see that prices have hit a pocket of prices which I believe is area in which the market may actually see the return of some kind of selling interest. Market did a three-way rebound from 3,808 to 3,964. Okay, this bracket of prices is between 3,956 to 4,002. So technically the market hit a pocket here, and we did see prices respecting these prices and come back down. Hopefully it's just a simple three-wave, and then it's not a more complex corrective pattern. Then if this is the case, the market is getting ready to come back down again. Okay, we will have to see what happens next. The only one index that is moving against the grain is actually the Nasdaq 100. We can see the Nasdaq has been very, very firm relative to the Dow Jones, and the S&P 500. It bounced off from 11,700 thereabout to 12,700 thereabout, and we can see that the price that it went to on Friday is actually marginally above my target price of 12,672. So we can see that there is a little bit of a selling interest re-emerging. This is a three-wave. If you want to see the three-wave pattern, we can go down to 1 hour time frame. You can see a very clear three-wave rebound. So this is the case. Has the market already hit its peak for this run? There's a possibility here because the fact that the Nasdaq 100 has been rallying so much ahead of itself against its peer, that makes it very vulnerable for people to notice this and maybe want to arbitrage and to sell the Nasdaq stocks rather than to buy it at this current price in time. So we have to watch this development over the next few days. Over in Asia, we can see that in Japan, Nikkei 225 opens and then comes straight down. But again, this is a bit too early because this structure here suggests that maybe if this if the price in the Nikkei 225 do not immediately accelerate below 26,600, there's a possibility it may unfold as a three-wave, and eventually it may get into this pocket of prices in which I do believe selling interest may re-emerge. This price range is between 27,440 to 27,700. So do watch out for this development here. Over in Hong Kong, we can see that prices in Hong Kong remains a little bit weak, and at its current rate, there's a risk that by the end of today, you will be trading at the year's low. Okay, so currently it's trading just above 19,000. You can see that this market is developing a three-wave, and if it's extended lower, ideal price will be between 17,400 to 18,000. Okay, so we see that there is this possibility here. Okay, over in mainland China, the CSI 300, which is a major equity index, is not as weak. We can see that the market do unfolds in what looks like corrective pattern, and the equality price target is between 3,860 to 3,920. So the market may actually drift towards this bracket of prices before it finds stability. Over in energy market, we can see that last week we saw quite a bit of sell-off in the crude oil itself. This is basis the WTI front month futures traded in NYMEX. We can see the price went down to $64.19, slightly below my target area of $64.55. And it does look like it's stabilized for now, but it is too early because there's no sign that buying interests are coming in en masse to hold the market. In fact, this market may actually drift all the way down to test the $62, $61. And if that's the case, perhaps that is an area that is more likely to see support coming in. Okay, so in the meantime, there is still a little bit of uncertainty surrounding the crude oil market. Okay, over in precious metal, we can see gold was on steroid. Gold this morning went up to $1,991, and then before it come under a little bit of profit taking. So this move here is telling us that there's still a bit of upside potential, a bit with the possibility that it may pull back in the meantime. So there could be some kind of profit taking that's going to unfold over the next 24, 48 hours. And this is currently not the best price to go in to buy yet. Let's see the structure. If it unfolds in a very neat three-way, then we can pick a level to go in and take our chance, because I think one more rush above 1,991 is a real distinct possibility here. Now, silver is a Johnny come lately. It did not really rally until most recently. So we can see the price this morning went up to $22.67 before it comes under a bit of a pullback. So technically, I think the support is going to be residing somewhere near the $21.50 level. So do watch out for a potential pullback in silver prices. Okay. Over in the dollar, we can see the dollar is under corrective pattern. We can see that the dollar peaks out at 105.87 as early as the first week of this month, and the markets continue to show weakness. So if the dollar is coming down, that means all the other principal major currency is likely to rebound. Okay, so far the market has pulled back rather deep. It has pulled back to 78%, almost 80%. So there is a possibility. Technically, this is about a very low risk possibility. If you want to buy here, you put your stop below 103. I think that's quite safe for the possibility the market may do a larger degree three-wave, and that is where you can actually take some short-term trading opportunity. Whether or not it is wise to do so is again dependent on whether you think the dollar can stabilize. Okay, of course, as I say, as the dollar pullback, the main beneficiary of the dollar pullback is actually the sterling. Sterling now has a double top here, just trading around 122 levels. So there's a risk it may actually pull back to something like 102. So there's a 200-point possibility here. So again, you have to watch as it unfolds. Over in euro. Euro versus the dollar isn't as strong because of the problem with Credit Suisse, which after all is a European bank, although it is not part of the European Union, but it is still within mainland Europe. So anything that's negative in Europe will actually spill over to the euro itself. We can see euro has also done a three-wave rebound into this bracket of prices between 106.70 to 107. So the high here so far this morning, as far as we can see, currently the high here is 106.90. 106.90 is well within this bracket of prices, and I have already gone short. And I think there will be another decline all the way to test of 104.50. So from here onwards, I think there is a good 250 pips potential to the downside. Aussie is a little bit of a dilemma. We have a three-wave rebound, not quite hitting the target of 0.670. So the high traded this morning was 0.6730. My target was 0.6740. So it missed it by about 10 pips before it comes back down. So whether this is going to be the end of the rebound, if If it is, then of course the Aussie is going to see much lower prices. Okay, over in the dollar versus the Swiss franc, over the yen. Now the yen is also another beneficiary of this fiasco that's going on in the last 2 weeks, because the yen is a safe haven currency. So we can see all these institutions has actually moved their assets into something like a safe haven, and currencies. In terms of currencies, we have two choices in which they can pick. One is the Japanese yen, the other one is the Swiss franc. But obviously, we can't be buying Swiss franc because of the uncertainty surrounding Credit Suisse. So now the yen is the sole beneficiary of this uncertainty. Most institutions are parking their excess fund into the yen. That saw the dollar versus the yen continue to slide. So we can see that this morning the market came down from 132.5 to the current price of just under 131.90. Okay, so we can see the price may actually drift a bit lower, maybe to test a 131. So again, if you have not already sold, the downside potential is actually not fantastic. Okay, dollar Canadian, on the other hand, is also showing sign of consolidation. I have held short Canadian dollars, dollar Canadian for quite some time, so I'm going to hold this position because there is no reason to get out yet, because I think the structure is telling us there could be another move below this most recent low here. So if the market goes down below this recent low here, maybe I will take profit. My target is at 136. So far, the lows that we have seen so far in March of this month is at 136.50. Okay. Now, of course, that brings us to a crypto. Crypto managed to achieve a new high, a 6 months high, and this morning we have a 28,474 traded, and the market has been pulling back. Obviously, when you look at this structure, you say, oh, because of the turmoil in financial assets, people are buying crypto as a hedge against all that. I think that is the wrong reason. It is, after all, categorized as a risky asset. If the market is having a risk-off attitude, they will not be parking their fund in Bitcoin. These are people who already have stable coin, and because of the crisis, as a result of the collapse of two crypto centric banks in the States. One, we have Silvergate, the other one we have Signature Bank, and Signature Bank is 10 times bigger than Silvergate, and that is causing a lot of uncertainty surrounding stablecoin. In particular, one company called Circle, in which they issue a stablecoin called USDC, and that coin here has seen a lot of withdrawal to the point whereby it has actually lost the peg of $1 to trade to as low as 87 cents to the dollar. But of course, now prices has gone back up to 99 cents. Last I heard, it has come back to almost at par. So right now, but even so, people are still a little bit uneasy about holding on to stablecoin because they just want to see how bad this thing is going to spread. So for the time being, what they do is, these are the people who have stable coin shifting their assets to the main token, the main coin. Of course, the biggest among them is Bitcoin. So Bitcoin actually benefited from this instability in stable coin, not so much as a safe haven relative to traditional financial assets such as equities. Okay, so we can see that yes, Bitcoin has rallied, but not so much as a hedge against the volatility in the financial assets here. Okay, so of course here we can see Ethereum also went up this morning to a high of 1,846 and 50 cents before it pulls back. But generally speaking, it does look like it is fundamentally sound to be buying, but again, this is not the price to buy. Let's see whether this could be a start of a more substantial corrective rebound. So if the market actually pull back in a corrective pattern, then let's see how the pattern evolve. And if the market have pulls back down and then rebound, we should be able to estimate where the market may land to, and that will present us a target to buy as the market unfolds. In the meantime, do watch out. Tonight, we don't have any major release, but this week we have a ton of central banks all going to decide on interest rates on Thursday, starting with the Federal Reserve at 2 a.m. Thursday morning, followed by the Swiss National Bank. And then in the same day, we're going to also see the result from the Bank of England deciding on their interest rate decision. So it's going to be a big week. So do watch out. And in the meantime, this is all I have for you. I will see you tomorrow. Bye-bye.